Next topic, that is cooperative society. A cooperative society is a voluntary association of persons of moderate means who unite together to protect and promote their common economic interest. In the other word, cooperative society in the name itself says cooperative. Cooperative means by understanding, by giving coordination to other person or for the society. In society we live in the society. So giving coordination to society by the group of people which is volunteers, that is called as cooperative society. We'll learn about this in deep. So first, cooperative organization is a society which has its own objectives for the promotion of economic interest of its members in accordance with the operative principles. This definition was given by the Indian Cooperative Society Act 1912. A maximum of 10 members are required to form a cooperative society. The Cooperative Society Act does not specify the maximum number of members, so there can be unlimited number of members. Next, we'll learn about features. So the first feature is voluntary association. Everyone having a common interest is free to join a cooperative society and can also leave the society after giving proper notice to the society. Second feature, legal status. Its recognition is compulsory and it gives it a separate legal entity. It does not denoted by the owners. It has its separate legal entity. That means it is a separate existence in this cooperative society. As an example, I will take a credit cooperative society. If you want to sue against this society, you can't blame a single person. There is no single owner here. That is a legal existence. You can only blame to that particular cooperative society. So there is no owner here. Everyone are volunteers. They have their limited liability. That's why its legal status is compulsory. That means registration is compulsory. Third one is limited liability. As we said, the liability of the members is limited to the extent of their capital contribution in the society. So there is no personal involvement of your assets for debts. It's only extends up to the number of investment or the amount of the investment you did. Democratic control. Management and controls lies with the managing committee elected by the members by giving vote. Every member has one vote irrespective of number of shares held by him. Fifth one, service motive. The main aim is to serve its members and not to maximize the profit. Here they don't have intention of making profit. They aim to serve at minimum profit. Bounded by government rules. They have to be tied by the rules and regulations formed by the government for them. So they have their own separate laws, cooperative acts regarding the operation of cooperative society. Distribution of surplus. The profit is distributed on the basis of volume of a business transferred by members and not on the basis of capital contribution of the members. If there is an surplus, that will be distributed to the members as a bonus or in the other way. Next, we are moving on to merits. In that first point is equality in voting status. The principles of one man, one vote governs the cooperative society irrespective of the amount of a capital contribution by a member. So whether you bought 1,000 share or you bought a 1 share, the vote is limited to 1. So it's equal. There is no separation or discrimination in voting whether they have irrespective of number of shares. Limited liability. The liability of the members of a cooperative society is limited to the certain extent, that is extent of their capital contribution. So if there is any debts, they won't charge any personal asset of the members. Stable existence. This is also one of the advantage. Death, insolvency of the members do not affect continuity of cooperative society. A society therefore operates unaffected by any change in the members. Economic in operation. Members generally offer honorary services to the society. They usually operate in economic because their intention is to serve nations or their intention is to give economic services, that is cooperative service. and elimination of middlemen. This helps in reducing cost. The customers or producer themselves are members on the society. With this, they will eliminate the middleman. Support from the government. The idea of democracy and hence find support from the government in the form of low tax, subsidies and low interest rate on loans. Next is limitations. First one, limited resource. Resource of cooperative society consists of capital contribution of the members with a limited means. The low rate of dividend offered on investment leads to limited resource. Even though there is no fixed maximum number of members, but they have the low rate of dividend because they don't have intention to make profit. They have an intention of making service to others. That leads to low rate of dividend. With that reason, they can't provide or they can't give high rate of dividend to their members. This lead to limited resource and they won't invest much. The second one, inefficiency in management. Cooperative societies are unable to attract and employ expert managers due to the salary reason. Probably that is the main reason which we can't hire expert managers, because they charge high number of salaries for them. They expect more. With these kind of cooperative society which operate for services, not making profit, with that reason they can't give a more number of salary. That's the main reason. That's why inefficiency in management. No professionally equipped handle. Because of their inability to pay them high salaries, the members who offer service on a voluntary basis are generally not professionally equipped to handle the management function effectively. Due to the salary reason, they can't hire expert as they're called professionals. When we are not hiring a professional, the work which is done by them are not possible by normal people because experts are expert. Next, lack of secrecy. As a result of open discussion in the meeting of members as well as disclosure, this secrecy will not maintained because of so many people which usually attend meeting. With this reason, secrecy of the business will not get maintained with the members. Government control. It complies with several rules and regulations related to auditing, accounts, submission of accounts, etc. Government has quite a control over some issues or some related rules. Regarding the rules, they will control. With the auditing, they will control. And we have to submit, as a cooperative society, we have to submit the accounting, etc. With this, they will control. So overview is government has a control over it. Difference of opinion. Internal quarrels arise as result of different viewpoint may lead to difficulties in decision making. Everybody has their own viewpoint, so with their viewpoint there will be some difference in opinion. That is quite hard when we are having a huge members in the society. Everybody has their own viewpoint. With that, we can't come to an opinion, and moreover they are not professionals. That's the main reason which that will affect to the business. Next is types of cooperative society. In that, first one is consumer cooperative society. It formed to protect the interest of consumers. It seeks to eliminate middleman by establishing direct link with the producers. So basically, they will eliminate the middleman. That will help to get linked directly to the manufacturer or wholesalers or producers. Next is producers cooperative society. Society purchase raw materials, tools, equipments and other items in large quantity and provide these things to their members at a reasonable price. Marketing cooperative society. It performs various marketing functions such as transportation, warehousing, packing, grading, marketing, research. With these tools, marketing cooperative society helps the members by providing such offers like warehousing, packing or even marketing research to get to know where exactly the customers are and what the customers are thinking. Farmers cooperative society. In such societies, small farmers join together and pool their resource for cultivating their land collectively. Such society provide better quality seeds, fertilizers, machinery and other modern techniques for use in the cultivations of crops. It provide them opportunity of cultivation on large scale. Credit cooperative society. Such society protect the member for exploitation by money lenders. They provide loan to their members at easy term and reasonable low rate of interest. Cooperative housing society. The main aim is to provide houses to people with a limited income at reasonable price. We're moving on to joint stock company. Joint stock company is a voluntary association of individuals for profit having a capital dividend into transferable shares. This is a definition given by Professor Pany. Joint stock company is a business entity existence, that means in which shares of the company stock can be bought and sold by shareholders. Each shareholders own company stock in the proportion evident by their shares, that is called certificates of ownership. Shareholders are able to transfer the shares to others without any effects continued existence of the company. Features. The first feature is artificial person. A company is a creation of a law and exists independent of its members. Like natural persons, a company can own a property, incur debts, borrow money, enter into contract and sue. This is the main reason this point is called as artificial person. Unlike a person is exactly same like a person, he can do all the activities. He can enter into contract, he can borrow money, he can own a property. That's why it's an artificial person. Then the second point, separate legal entity. From the day of its incorporation, a company acquires an identity distinct from its members. Its assets and liabilities are separated from those of its owners. So it's not related to its owners. You can only sue against a company, not a person. Here company is an artificial person who can enter to a contract. They can even sell and buy any products or even assets. Next one is formation. The formation of company is a time-consuming, expensive and complicated process. It involves the preparation of several documents and follow with several legal requirements before it can start functioning. It's not easy like sole proprietorship. The formation is quite complex. Perpetual succession, that is permanent existence. That's a similar point here. A company being a creation of a law can be bought and end only by law. It will only cease to exist when a specified procedure for its closures called winding up is completed through the law, unless it will be permanently existed like a statute. Control. The management control the affairs of a company is undertaken by the board of directors, which appoints the top management officers for running the business. Usually the control will be held by the management, that is board of directors, and they will appoint top level management officer to run the business. Liability. The liability of the members is limited to extent of their capital contributed by them in a company. The creditors can use only the assets of a company, not a personal assets of members or even employees. Common seal. The board of directors enters into an agreement with others by indicating the company's approval through a common seal. So every company has a common seal. Through that, the board of directors is saying that this company is entering into this contract. Risk bearing. The risk of loss in a company is borne by all the shareholders. In the face of financial difficulties, all the shareholders in a company have to contribute to the debts to extent of their shares in the company's capital. So they can't expect more than that. They can only bond until the rate or whatever they invested with the shares. Merits. Limited liability is the first merit. The shareholders are liable to the extent of the amount unpaid on the shares held by them. Also, only the asset of the company can be used to settle the debts, leaving the owner's personal asset free from any charge. So they can't take an action against the personal assets of the owners. Transfer of interest. The shares can be transferred at any moment freely, because if you don't want to keep the shares with you, you can sell at any point and you can transfer the share and you can get back the money which you are invested. Sometimes it will give you profit. Perpetual existence, we already talked about this. What is perpetual existence in the features? We can only bring end through the law, or we can only create through the law. That is called and it will run like it will be forever. That's a perpetual existence. And next point is scope of expansion as compared to the sole proprietorship and partnership form of business organization. A company has a large financial resource. With this, they have very huge scope of expansion. Professional management. A company can afford to pay higher salary to the specialist and professional. It can therefore employ people who are expert in their areas of specialization, will be hired with a high salaries. That will lead to good management of work. We are moving on to limitations. The first one is complexity information. The formation of a company requires greater time, effort, and extensive knowledge of legal requirements and the procedure involved. So it has require a huge time, effort, knowledge, and as well as a procedure. The second point is lack of secrecy. All information is able to general public. It is therefore difficult to maintain complete secret about the operations of a company. They must inform to the public because the real owners are the shareholders. They need to publish the statement in their website, financial statement. So usually there is no maintenance of secrecy. Impersonal work environment. Separation of ownership and management leads to situation in which there is a lack of efforts as well as personal involvement on the part of the officers of a company. So this leads to impersonal work environments. Numerous regulations. The functioning of a company is subject to many legal provisions and compulsions. A company is burdened with numerous restrictions in respect of aspects including audit, auditing, filing of reports, and preparation of documents. This will lead to numerous regulations to form a company. Delay in decision making. Companies are democratically managed through the board of directors, which is followed by top management, middle management, and lower management. With this, decisions are very delay like this. Oligarchic management. Company is said to be democratically managed but actually managed by few people, that is equal to board of directors. Sometimes they take decisions keeping in mind their personal interest and benefit, ignoring the interest of shareholders and company. That is called as oligarchic management. Conflict in interest. There may be conflict of interest among various shareholders of company. The employees, for example, may be interested in higher salaries. Consumer desire higher quality products at lower price, and shareholders want higher returns in a form of dividend. So everybody has their own interest. For that, there will be a conflict. Types of companies. There will be two types of company, that is private company and public company. We'll talk about a private company first. A company whose shares may not be offered to the public for sale and which operates under legal requirements strict than those for public companies. For the best example, ABC Private Limited. We will be discussing about this private and public company in coming chapters. However, this is a very simple meaning. The second one, public company. A company whose shares are traded freely to the general public. Those are called public companies. We have a chart here, difference between public company and private company, that is from table number 2.3. We have a 3 column, that is basis, on which basis they are giving a difference for public company and private company. First, we'll talk about the members. On the basis of members, minimum there will be 7 members, maximum there will be unlimited members. In private companies, minimum 2, maximum 200. Minimum number of directors, there will be 3 directors in public company, there will be 2 directors in private company. Index of members, in public company it's compulsory, in private company it's not compulsory. Transfer of shares, no restriction in public company, restriction on transfer in private company. Invitation to public to subscribe to the shares, can invite the public to subscribe to its shares or debentures. It's quite free. Cannot invite the public to subscribe to its securities. Choice of form of business organization. This is a part E topic. When you're choosing which business is suitable on what basis, this is quite important. Based on the cost, which is important, as this is section E type practical oriented questions. Based on the cost and ease, in setting up organization, sole proprietorship is least expense and can be formed without any legal formalities to be fulfilled. Company is expensive with a lot of legal formalities. So when we come to cost and ease of formation, sole proprietorship is the best because it starts quite fast and less legal formalities. Based on liability, which is best? Based on liability, cooperative society and joint stock company is best because there will be a limited liability. For continuity, cooperative society and joint stock company. Based on management ability, joint stock company is best. Rest all don't have enough managerial ability to, that is in the sense professional handles. Capital contributions, joint stock company is best because we can get a huge capital from a public. If we have a less capital, we can go with sole proprietorship. Degree of control, if direct control over operation and absolute decisions making power is required, we have to go with sole proprietorship because there will be very freedom. You don't need to ask anybody any questions, you don't need to conduct meeting. Nature of business, if direct personal contact is needed with the customers, you need to start with a basic, that is small sole proprietorship business. At last, we move to very important topic, that is comparison or evaluation of form of organization. On the basis, they may ask you in final exam with any two comparison like sole proprietorship and partnership, or partnership and joint Hindu family, or cooperative society and a company. The first one is formation. Minimum legal formalities, easiest formation in sole proprietorship. In partnership, regulation is optional, easy formation. In joint Hindu family business, less legal formalities, exemption from registration, easy formation. In cooperative society, registration compulsory, greater legal formalities. In company, registration compulsory, lengthy and expensive formation process. Members, only owners will be there in the sole proprietorship. In partnership, minimum to maximum 50. In joint Hindu family business, at least 2 persons from division of a family property, no maximum limit. In cooperative society, at least 10 adults, no maximum limit. In company, minimum private to public company 7, maximum private company 200, public company unlimited. Capital contribution, here limited finance. In sole proprietorship, in partnership, limited but more than that can be raised in case of sole proprietorship. Joint Hindu family business, it's ancestral property. In cooperative society, it's limited. In company, it's large financial resource. When come to liability section, in sole proprietorship, unlimited liability. In partnership, unlimited and joint liability. In joint Hindu family business, unlimited to Karta, limited others. In cooperative society, it's limited. In company, also it is limited. Control and management. In this section, in sole proprietorship, owners takes all decisions. Quick decision making will be there. In partnership, partners take decisions. Consent of all partners is needed. In joint Hindu family, Karta take decisions. In cooperative society, elected representative, managing committee take decisions. In company, separation between the ownership and management. Continuity. In sole proprietorship, unstable business and owner regarded as one, it is not continued. In partnership, more stable but affected by status of partners. Joint Hindu family business, stable business continues even if Karta dies. Cooperative society, stable of separate legal existence status. In company, stable because of separate legal status. When you come to know with the what is the difference between each of them on the basis with these form of organization, you'll get to know about whole chapter. So that's the end and we'll wrap up here. Thank you. If you like this video, hit like button, subscribe to our channel. Like always, see you in next class.